House flippers are losing their shorts in 2023. What if I told you that in a certain market in March of 2023, 1 in 3 homes sold by an investor was sold at a loss? In this video, not only going to share some stats about home flipping, but I'm going to talk to you about what you can do if you're going to buy and sell real estate to avoid being one of these statistics, somebody who's losing money. All right, Matt Gouget, Matt, the mortgage guy, licensed in 47 states, powered by YouMortgage. Go to greatmortgagebroker.com to connect with me and my team. In today's video, I want to talk about this article that my buddy Mike Zuber talked about on something I saw from him recently. I went and read the article. I work with a ton of real estate agents who either as their main business or as, a side business to their normal real estate business are buying, rehabbing, and selling homes. You probably know it from the TV shows as home flipping. In a market that we're currently in, where home prices are stabilizing and you're not seeing 2% month-on-month growth, it becomes harder to flip homes and do it profitably. So first, I'll start with the article. We'll share some stats, and then I'll tell you my opinion on things you can do to avoid being a statistic or somebody who's losing money in this market. All right, here we go. Investors lost money. I'm gonna start right here, halfway down the page. Investors lost money on roughly 1 in every 7, 13.5% of homes they sold in March, according to a new report by Redfin. And I read somewhere else that Redfin defines a home flipper as somebody who has bought and sold a home within 9 months. Sure, there's going to be some people who had life stuff come up where they had to sell within 9 months and they're not necessarily a home flipper. But I would say that probably is made up by the fact that some people who are flipping homes and doing it that way might take 10 months, 12 months based on how quick they rehab it and how quick they get it to market and how quickly they sell it. So if you use that within 9 months metric, it's pretty accurate that that's, a home flipper. And some don't fall in with that and that should, and then some fall outside of it that should, so it should even out. So anyhow, only 4.8% of overall US homes that sold in March sold at a loss. So, 1 in 20 homes sold at a loss, period. And then when you talk about those ones that were bought and sold within a 9-month period, that's where they get the 13.5%, 1 in 7 roughly. That March stat followed a February where real estate investors lost money on 14.5% of the homes sold. And so down in March, but still like 13.5%, 14.5%. That's high. They're saying here in the article, highest since 2016, and a long stretch from the record monthly low of 2.8% in May of 2022. If you don't recall, May of 2022, rates were still relatively low, in the 3s and 4s, and there was a ton of demand. It was spring buying season in a lot of markets. A lot of markets that I work in California. May 2022 was just about the peak of home prices. There wasn't a lot for sale. Inventory was down. Rates were low, so things were affordable. And, that was kind of the last hurrah before rates kind of, did their thing over the next 6 months. Demand quelled and home prices started to come down. So no surprise to me that May 2022 was the record low for folks losing money. And if you think about it, as poor as some of these home flippers do in either what they purchased for, what they estimated for repairs, how they marketed the property for sale, all these things, with only 2.8% losing it's quite a great stat because I know not everybody's doing it at a high level. And that's more of what I'll talk about towards the end of this. Investors are most likely to lose money in markets that saw the largest surges in house prices. Doesn't surprise me either, right? We've talked about this. These markets, Phoenix, Arizona, Sacramento, California, Boise, Idaho, Austin, Texas, parts of Florida that saw 30, 40, 50% home price appreciation during those pandemic years, of course, are flattened out, down 5 or 10% off their peaks. And so those markets are going to be hard to flip in and are going to be the ones where they say real estate investors are most likely to lose, right? And so if you want to see the hardest hit, here it is in March. The hardest hit market was Phoenix, 30.7% of homes, almost 1 in 3 investors lost money. Las Vegas, Nevada was 28%. Jacksonville, Florida is 20.9%. Sacramento, California, my hometown, 20.2%. And Charlotte, North Carolina, 17.4%. So this is more data to support the fact that these markets that saw the most appreciation are the ones that are either stabilizing, slightly correcting. I'll be the first to admit, from May of 2022, the peak, home prices are down 5 or 10%. People don't realize that yes, prices are already down. People are waiting for a price correction. They already are. That's already here. And so here's what I want to say to kind of put a bow on this whole flippers are losing money. 1, does not surprise me. 2, here's what you do to avoid it. You know your numbers front, back, sideways, from all angles. Your numbers on acquisition price, a fancy way of saying how much you bought it for. Your numbers on how much it's going to cost to rehabilitate, rehab costs, to get it from where it's currently at, condition-wise, to where it's going to be in the best position to market and to sell. And ultimately, after repair value, you were able to miss on this number for a long time. We're no longer in that market, especially in these markets that were really hot. So if you see a home in a neighborhood where 4-bedroom, 2 baths, 2,000 square feet sell for $550,000, you cannot go in there and purchase plus rehab costs, expect to list it for $559 and sell it for $580. People did this in the past and the market bailed them out because the market was going up 2% per month. So you could just sit on the thing for 3 or 4 months and watch it go up $30, $40, $50,000 in value just because of the market. When the market is flat, when the market is stabilizing, some of these markets might even be trickling down. You have to be airtight on those numbers with a lot of wiggle room, with a lot of meat on the bone, meaning I can buy this for $375. I should be able to rehab it for about $50,000. If everything goes wrong, everything, and I go above budget on everything and find new problems, I might have to spend $75. So $375 plus $75, $450. My holding cost, what it's going to cost for the hard money loan on the capital, what it's going to cost to pay property taxes and insurance and all the other things that you're needing to pay. Overestimate on that too. If you plan to sell it in 90 to 120 days, calculate your holding costs for 6 months, for 180 days. And then after all that, if your all-in number is $465 and you plan to be able to sell it for $550, again, being conservative, knowing that comparables sold between $560 and $580, then you've got yourself a winner. Not everybody's doing that, right? A lot of people I know in and around the markets that I do a lot of business in, they want to flip for the sake of flipping. They want to flip for the sake of saying, I'm an investor. Do it from a place of knowing your numbers and truly having a good deal in front of you, and also being dialed in with your teams. I know a lot of people doing it at a really, really high level. And so they have no chance of falling into this stat, which I would imagine is first timers, part timers, people that do it without much of a plan. So hopefully this is helpful. Let me know what you're seeing, feeling, and hearing in your market. Leave comments, questions, concerns about things you'd like to hear me talk about on this channel. But interesting market. Winners are winning. Professionals are here to stay and here to play. Other folks that are doing it part-time and doing it half-ass, best of luck to you. Thanks for watching. Check out more videos here, and here. Got 700 plus on this channel, so you got to find something you like.